Hi, this is Dax with Elemental Risk Management. In this video, I'm going to talk to you about an agreed value property endorsement and a little bit about what that is. So agreed value endorsement, what it is typically insurance companies, whether you realize it or not, when your agent submits an application to get a quote for property insurance, the insurance underwriter, the insurance carrier is agreeing to that value. And if they don't agree to it, they'll set their own value. In the case that you don't agree to it and say, for whatever circumstances, I think I can rebuild for less than what the insurance company is saying is replacement cost. And you can obtain an agreed value. The insurance company is not going to pay any more than that, but it's going to satisfy possibly what you need. One thing I'll say about that is, in my experience, we haven't really seen agreed values save all that much money, which is usually the intent of a client or insured in going down that road. We haven't seen it save much money, if any at all, and it kind of does limit some other coverages as well, limits the insurance company is going to pay to replace your building. And ultimately, we haven't really seen, after attempting to go down that route, we haven't seen clients ultimately take it, because buildings, property insurance in and of itself really isn't a terribly expensive coverage, and the difference of couple $100,000 on your building value doesn't change the premium enough to warrant restricting coverage with an agreed value endorsement. That's a little information about that. If you have any questions, feel free to reach out to me or somebody on my team. We'd always be happy to help and answer any questions. Thanks.